What if I told you that just 3 American billionaires now own more wealth than the poorest 160 million Americans? Or that one man's fortune swelled to $300 billion at its peak? This might sound like dystopian fiction, but it's real. Many observers warn that we've entered a new Gilded Age, a time when once again the top 1% hold wealth and power comparable to the era of Rockefeller and Carnegie. In fact, the richest 1% now own roughly 1/3 of all U.S. wealth, a concentration we haven't seen in about 100 years. Over 100 years ago, during the original Gilded Age of the late 19th century, a tiny elite amassed unprecedented fortunes while ordinary people struggled. Industrial titans like John D. Rockefeller and Andrew Carnegie became the richest men on earth, as their monopolies in oil and steel generated vast profits. By 1890, the top 1% controlled nearly half of all wealth in America. Mark Twain dubbed that era the Gilded Age, because beneath a thin, glittering layer of prosperity lay deep social problems, rampant poverty, exploitive working conditions, and blatant political corruption. It was a time of robber barons and tenement slums, of opulent mansions rising above squalid sweatshops. That first Gilded Age eventually met its reckoning. Public outrage reached a boiling point, forcing reforms to tame the excesses. Progressive-era leaders broke up monopolies with antitrust laws and introduced a federal income tax to rein in the wealthy. Later, the Great Depression of 1929 and the New Deal in the 1930s further leveled economic disparities through financial reforms and a social safety net. By the 1950s, American inequality had narrowed dramatically. The richest 1% owned only about 20% of the wealth, down from roughly 45% around 1900. For a time, it seemed like the age of extremes was over, and a broad middle class prospered. But starting in the 1980s, history began to repeat itself. A new surge of inequality was unleashed. Taxes on the rich were slashed, industries deregulated, and labor unions weakened. Globalization sent manufacturing jobs overseas, undercutting middle-class wages. And critically, the stock market boomed, funneling massive gains to those who already owned most of the assets. Since 1980, the share of national income flowing to the richest 1% has roughly doubled, while the share going to the bottom 50% has significantly shrunk. By the end of the 2010s, America's wealth and income gaps had exploded back to levels not seen since the Roaring '20s. The 400 richest Americans held more wealth than the entire bottom half of the country. A handful of multi-billionaires once again dominated the economic landscape, much like the railroad and oil tycoons of old. Then came the COVID-19 pandemic, which turbocharged this divide even further. In 2020, while millions of working families were losing jobs or struggling to make ends meet, billionaire wealth went through the roof. The government and Federal Reserve injected trillions of dollars to stabilize the economy, and much of that easy money flowed into stocks and assets. Share prices surged to record highs, and guess who owns the bulk of those stocks? The richest 1%, who together hold about half of the entire stock market value. As a result, U.S. billionaires collectively saw their net worth soar by roughly 70% in that single year. By March 2024, American billionaires were worth over $5.5 trillion combined, nearly double their total wealth from just before the pandemic. The number of billionaires swelled as well, from 614 in early 2020 to more than 730 today. It's as if the rich hit a jackpot in the midst of a crisis. Consider Elon Musk. His net worth rocketed from around $25 billion to over $250 billion in about 2 years, thanks to Tesla's stock skyrocketing. Or Jeff Bezos. He added tens of billions to his fortune as Amazon thrived during lockdowns. This concentration of wealth is so extreme that just 3 Americans, Bezos, Musk, and one other, now have as much wealth as the bottom 50% of Americans combined. Think about that. 3 people versus 160 million people. Meanwhile, half of American households have essentially no wealth. The bottom 50% of Americans today own only around 2% of the nation's wealth. Many are underwater financially, with little or no savings and plenty of debt. For these families, the economic recovery after 2020 brought little relief. In fact, recent high inflation has made it even harder for those living paycheck to paycheck, even as billionaire fortunes hit new highs. All this is why more and more observers say we're in a new Gilded Age. The parallels between the late 1800s and today are glaring. Back then, it was oil barons and railroad magnates. Now it's tech moguls and Wall Street financiers. Then giant trusts like Standard Oil and U.S. Steel monopolized industries. Now a few big tech and corporate giants dominate markets. Google alone controls about 90% of online search, akin to Standard Oil's grip on oil refining in its day. In both eras, monopoly power allowed a few companies and their owners to capture outsized wealth, widening the gap between the elite and everyone else. Politically, the Gilded Age was notorious for corruption. Wealthy industrialists brazenly bought influence, and political machines catered to moneyed interests. Today, open bribery is rare, but money still exerts enormous influence. Corporations and the super-rich pour billions into election campaigns and lobbying to shape laws and regulations. The result? Tax cuts for the wealthy, loopholes for big firms, and often a government hesitant to upset the status quo that benefits the rich. It's a modern echo of the Millionaires Club government of a century ago. And what about everyday working people? In the 1880s, factory workers toiled long hours for low pay, and labor unrest shook the nation. Fast forward to today, we don't have children in factories or mercenaries breaking strikes. Labor laws protect workers now. But we're seeing a new wave of worker discontent. For decades, wages for typical workers barely budged while CEO salaries and corporate profits soared. The typical CEO of a large company now makes over 300 times what the average employee earns, a gap far greater than it was in the mid-20th century. In 2023, the U.S. saw its biggest surge of strikes in decades, from Hollywood to auto factories, as workers demanded better pay and conditions after seeing decades of inequality. It's an echo of the labor uprisings of the original Gilded Age. People are pushing back, if not in the violent clashes of the 1890s, then with protests, union drives, and demands for change. So what happens next? The first Gilded Age did not end quietly. It took major policy changes and some calamitous events to reverse course. Public pressure and activism led to trust busting, new labor protections, and much higher taxes on the wealthy. Those changes, combined with the leveling shock of the Great Depression, broke the grip of the old oligarchs and ushered in decades of relative equality. Today, we're at a similar crossroads. If this new Gilded Age continues unchecked, history suggests two outcomes. One is that we take action to rebalance society, perhaps a modest wealth tax on billionaires' fortunes, tougher antitrust enforcement to break up monopolies, higher minimum wages and stronger unions to boost workers, and big investments in education and healthcare to expand opportunity. Moves like these could gradually narrow the gap, much as progressive era and mid-century reforms did. The other outcome is more ominous. We do nothing and let inequality keep rising until a crisis forces change. That crisis could be economic, say a financial meltdown fueled by reckless speculation and debt, as in 1929 or 2008. Or it could be political, rampant social unrest, a breakdown in trust, or the rise of extreme populism from people fed up with the status quo. One way or another, extremes like this tend to correct themselves. In plain terms, either we fix it deliberately or a collapse will fix it brutally. The hopeful news is that awareness is growing. Huge majorities of Americans, across party lines, now agree that the wealth gap is too high. There are louder calls to tax the rich, raise worker pay, and rein in corporate excesses. We've seen proposals for billionaire taxes, and antitrust suits against tech giants are underway. It's too soon to tell if these efforts will succeed, but the pressure for change is building. What's clear is that the status quo can't last forever. The pattern we're in, a society where the 1% owns almost everything, is a powder keg, just as it was a century ago. The last Gilded Age ended with a bang, not a whimper. The lesson from history is that such extreme inequality is unsustainable. The only question is whether we tackle it head-on with reforms or wait for it to implode in crisis. The story of America's first Gilded Age shows that change will come one way or another. This time, it's up to us to decide how. We can learn from the past and choose a wiser path, or let history repeat itself in the hardest way possible. One way or another, the gilded path we're on is nearing its turning point. The choices we make in the next few years will determine whether this new Gilded Age ends in renewal or in ruin.